Thanks for tuning in. Yesterday we were talking about in the last 1 hour about how the market was all about result reactions to a Bharat Forge, to a Hero MotoCorp, etc. Today is no different, by the way. While the index is down about 1/3%, there are a clutch of stocks which are reacting to results and reacting well. So I want to start off by talking about SKF, their Q4 numbers. Revenues were up about 10% at 1203 crores. The estimates were 1123. Margins up 247 basis points at 17.72% versus the Bloomberg estimate of 16%. And the PAT up 42% at 175 crores versus 123 crores. The Bloomberg estimate was 137 crores. Now, what is so special about this? Amongst other things, it's the highest PAT number and growth number, I think, in 13 quarters for SKF. And for reference, both margins and PAT growth for Schaeffler India, which is related, rather in the same field, their performance was flattish, whereas SKF has shown growth. So because of this, I think the street is rewarding what is not a very cheap stock, but duly rewarding the kind of performance that they've come out with, which is SKF. But there is, of course, a collateral impact on Schaeffler, which is up 2%. But the hero of that end of the market has to be SKF. Then we've seen some positive commentary from brokerages on Hero MotoCorp results. And look at what's happened to both Hero and TVS. Some very strong moves there. To my mind, the large cap story is what's happening to Hero and TVS. TVS is not in the index, but the two-wheeler majors, both of them doing what they are doing is a remarkable show. Maybe Bajaj Auto might also be, at least it started off well, and yesterday too Bajaj Auto did okay. That also is up about 2.5%, but this is a really stellar show by the two-wheeler majors in the session today. So that's the other aspect that you should watch out for. Has Bank of Baroda reacted is the question, because RBI lifted curbs on Bank of Baroda's Bob World app with immediate effect, and that stock is up about a couple of percentage points as well. Then look at the numbers of Kirloskar Oil Engines. We'll bring the stock up as well. It started off very well, has declined a little bit, but was up about 6-7%. Currently too is up about 5% on 1 million shares traded, which is actually very high for Kirloskar Oil usually. Now, why has this happened? Look at the numbers again. Revenues up 20%, nearly 20% at 1660 crores versus 1384, and the net profit up 86%. Why? Because margins are up 450 basis points at 18.23 versus 13.72%. And therein the story lies. EBITDA up 59%, but that margin performance extremely solid, as a result of which Kirloskar Oil too has had a very strong quarter, yes, but has also done very well. Now, it's not just about results though. And we'll get in Ganeshram Jayaraman in just moments from now to talk about what he makes of the results season and more. But it's not just about results, because if you look at what's happened to Manappuram and Muthoot today, that's because of a supposed RBI advisory note to some of these gold loan NBFCs telling them that they should not to exceed cash disbursement limit. The loan amount in excess of 20% should not happen. These are various media reports who are suggesting this. And while one of the wire agencies had published this during market hours yesterday and the stocks had fallen, I think they are taking more cognizance of this today, because it's been widely reported, as a result of which both Manappuram and Muthoot have corrected quite strongly in the session today. So watch out for that as well. In minutes from now, I'll also get in my colleague Anushi to talk about Larsen and Toubro, because when you look at the large caps, while Hero and TVS are on one side of the end, L&T is quite on the other side of the end, 3.5% lower for Larsen and Toubro in the session today, post their guidance numbers and both for order inflow as well as revenue growth for FY25. So I think therein lies the problem for some of these names. So that's the first set of stocks. Now, if you just look at what's happened to BSE 500 winners and losers, on the losing side, there is of course Manappuram and Muthoot which stand out there, and they are certainly come off. There is Piramal, which has also come off, not looking great, and a couple of others on the gaining side include an Adani Power and a Timken, both of which are doing okay, in addition to, of course, Hero and TVS, which have done well, but yeah, pretty strong gains for Adani Power as well in the session today. Now, because we said it's earnings season, Arvind Textiles came out with numbers with Q4 earnings, and while the revenue growth was over 10%, raw material costs did impact the margins. Let's hear out the management.
Hello and welcome. We have with us the management of Arvind Limited to talk to us about the numbers. You're watching NDTV Profit. I'm Harsh Saita. We have with us Mr. Puneet Lalbhai, who's the Vice Chairman at Arvind Limited, to talk to us about the Q4 numbers as well as what one can expect from Q1 as well as FY25 full year. Welcome to NDTV Profit, sir.
Pleasure to be here.
Hi. So, sir, first off, let me try and break down this quarter. What's exactly transpiring with regard to margins, and where can one see numbers start to stack up for FY25? What's the expectation like?
So I think it was a very strong quarter. We had revenue growth up to above 10%, which is the first quarter in many quarters where we've seen such growth. The growth was fueled by both our volume growth in garments and our very good performance in the advanced materials division. I feel that the year was a story of two halves. The first half of the year was very low demand, brands being saddled by inventories. We worked through all of that, and towards the second half of the year, demand started reviving. I believe that going into the next year, that better demand scenario is likely to continue. AMD continues to remain strong, so we should see some growth over last year overall next year, with it being driven by the same two factors: growth in volumes, especially on the garments front, on the conventional textiles business, and growth in AMD continuing to be strong.
Right, sir. And with regard to raw material, how's the raw material cost evolution playing out? If you can talk to us about that and set us the context for FY25. How has, of course, April already been, but how do you anticipate the numbers shape up in terms of FY25? Will raw material prices remain benign? Is that the expectation?
So what we saw last year was dramatic raw material deflation. And that led to the top line on the entire financial year being slightly negative. I think most of the raw material deflation is behind us now. And prices are going to remain range bound and hopefully reasonably stable. That is our view at the moment. So we don't see any raw material linked impact on top line going into the new year.
And you can, of course, catch this whole conversation on all our digital platforms and channels. So keep that in mind. Thanks for tuning into Talking Point, though. And the case for a chat for our guest today is threefold, as is usually the case. We, of course, talk about whether Q4 earnings in line thus far have a material impact on markets or no. That's the first point. We, of course, talk about whether falling household savings will keep deposit growth under check for banks. Remember, deposit growth has lagged credit growth by a significant margin in the recent past. And could consumption be under pressure? There are green shoots for select rural pockets. Companies like Pidilite have spoken about it, but not everybody is saying the same thing. Let's ask all of these things to Ganeshram Jayaraman. He's Managing Director and Head of Avendus Park Institutional Equities. Joins us right now on the show. Ganeshram, good having you. Thanks for taking the time out. I hope all is well.
All well, Neeraj. Thank you. Good being here.
The pleasure is entirely ours, always, Ganeshram. Can I start off by talking about the earnings season thus far, Ganeshram? Most notes seem to suggest that, as per their estimates, of course, the Sensex and as per consensus, the Sensex numbers have largely been in line or slightly better. Have you been okay with the earnings season thus far, or are you disappointed?
The Nifty stocks are not seeing any downgrades, nor have they seen any material upgrades. It's hardly 1% here or there. In fact, for 4 quarters now, the FY25 earnings estimates haven't changed at all for the Nifty companies. But the broader universe, we are seeing more downgrades, especially in sectors like IT or even cement. We have seen some earnings downgrades for fiscal 25 come, especially after this quarter. So out still, only about a third of our coverage universe results have come so far. Typically, the later half tends to be more reflective of how things go. So fingers crossed, but it's been mixed. So just to put it in a nutshell, IT has seen some downgrades. The capital goods has seen some upgrades. Cement has seen some downgrades so far. Nifty unchanged, broader universe, some downgrades.
The other thing is the commentary and the implications. Ganeshram, would love to know what you think about it. Um, uh, for example, I'm drawing a line from what Bharat Forge had to say yesterday, and they gave a fairly cautious commentary in February when they came out with numbers, citing global headwinds. Pat, they come out 1 quarter later, say that they were too pessimistic because of the Red Sea route, but I think they've changed their side to optimism. They are looking at green shoots, not just in defense, but in industrials and autos as well. And maybe a few other companies have also spoken about the similar thing happening on the global front. Now, we know that global growth has largely been a concern. To your mind, do companies exposed to global growth, are they kind of bottoming out on the growth front from the global businesses, or not quite?
Selectively, but not at a broader level. We have not seen global growth pick up, exports pick up in most categories. We have seen it in very few, but in most categories, global growth, exports growth we haven't seen widespread pickup. Where we are confident of is private sector capex led growth picking up next year. I think that's the most positive confidence signal that we are getting. And it's not going to be government capex, it's more going to be private sector capex led pickup in the coming year. Property capex led pickup coming next year. Those two, we are more confident than we were. We have been confident for almost 18 months now. Stocks have done very well, but we still hold on to the view that while stocks have done well, they are in the expectation of earnings, and those earnings will play out over the next 18 months on private capex. So some commentary from managements also are indicative of that now. We have been speaking to some banks also, and we are seeing some private sector capex led sanctions or likely disbursements picking up next year. So the most positive part of the growth signals for next year is coming from B2B or the private sector led capex led signals. That's the most important. Caution still continues on the consumer side. We are not seeing a significant, in fact, you're right when you started off saying rural has started seeing some bit of improvement. Two-wheeler companies signaling that, some FMCG companies are mentioning that. We are also seeing it on the ground, but urban is slowing down more than we thought, and our concern remains consumption. So clearly for us it's a mixed picture on the broader expectations for next year.
Is this urban consumption slowdown cyclical in nature, Ganeshram, also a case of a higher base, or no, not necessarily so?
No, it's a combination of a few things, Neeraj. I think what's happened is the one of the points that you alluded to, which is the whole savings, which is in some form linked to consumption, right? If you slice through the savings numbers, it's not as if India started suddenly saving lesser. It's that net savings, which is net of leverage, which is the concern, and leverage has gone up, and that's actually why we think consumption is also not seeing fresh legs, which is consumption led by household leverage at the mass consumption level. We are not seeing that to sustain the way it has over the last, especially since COVID, and our concern stems from there. So the two are linked, which is mass consumption in some form linked to savings slowdown. It has implications for both deposit growth. It has implications on how lenders will slow down. It has implications on how consumer related companies, especially urban, especially leveraged consumption, will see moderation in growth expectations going forward. That is our single biggest key concern that we continue to have.
And Ganeshram, just the follow-up to that is whether this fall in savings rate keeps deposit growth muted, And is that going to be a concern for the banking system? Because now there has been a number of months that we've seen credit growth or rather deposit growth lag credit growth meaningfully. What happens in the event that deposit growth stays muted and we see a period of lower interest rates in the next 12 months, which might lead to even heightened credit growth?
So I think that's a very important concern. We also share that concern. It's now 24 consecutive months. In fact, it's the first time ever. We can go back data as much as we want, but we have never seen 2 consecutive years of absolute credit growth outpacing absolute deposit growth, and it's illogical, but it's happening, and that is a very significant concern. And we think that's reflected in the elevated CD ratios of banks, and that's reflecting in many banks underperforming. That will, we think, lead to banks slowing down credit growth, especially consumer lending segments, which we think can have an impact on volume growth and earnings growth for rest of the companies into next year. So very, very important, and we think important challenge, and we are very, very about that as well. That has an impact on at a broader level earnings expectations of mid-teens for next year, because it has not only impact on volume growth, it has an implication on premiumization, it has an impact on operating leverage, and at a bottom line level, even a small, maybe even 250 bips to 300 bips lesser credit growth next year can have a lot more impact on earnings expectations for next year at a broader level. That is an important, possibly the most important concern which we will have.
So non-banking impact on earnings, and of course banking earnings as well, because if they indeed go slow on credit for consumer credit, that might have an impact on their earnings, even if it's compensated in part, Ganeshram, by the capex growth, right? So would banking earnings also come under cloud?
Yeah, it will, because the lending rates of the corporates are a lot lesser than the consumer. So it will have an impact on not only growth for corporates, but for the bank's balance sheets. It will also have an impact on margins, and it can have an impact on credit costs as well. And also some of the new regulations which the Reserve Bank has come up with for banks can have an impact on treasury gains or credit costs. So which means earnings growth expectations of most banks can be well below what it has been over the last 18 months. And this, I'm not even considering the impact of rate cuts. If rate cuts do come, and I'm not a believer that it will come in the next 6-9 months, I don't see it in this calendar for sure. I think it can come in next calendar. If that comes, and given that repo rate linked loans are almost more than a third of the overall loans, it can have an impact on yields as well. That can again have an impact on margins for fiscal 26. May not be for 25, but for 26, fiscal 26, that can happen.
Hero of the earnings season currently, you could argue is, well, pun intended, hero. But what I mean to say is that Hero, TVS, autos by and large have actually had a very good performance relative to almost everything else, and in absolute terms as well. Ganeshram, you mentioned, I heard you say that two-wheeler commentaries, speaking of the rural upside, is this a net positive for these companies over the slightly medium term, because rural has lagged big time? Does this make the sentiment favorable? And in auto, aside of two-wheelers, autos in general, this earnings season has stood out. I mean, Bharat Forge, Hero, TVS are all cases in point. What do you make of these numbers?
Very good. In fact, two-wheeler companies, what's happening is about 6-7 years now, maybe 2017, we saw the last time sales were good, and now the replacement cycle of two-wheelers is coming out, in the sense there are more vehicles on the road which were sold prior to 2017 or before than since, which means vehicles are now at an average level almost 10 years old, and it leads to replacement cycle, and that's very, very positive for two-wheeler companies. And also the electric vehicles which were taking some bit of market share away, and those aren't as much as it was over the last 2 3 years. So that's also helping the incumbents and the ones we have known for a long time. So this is in two wheelers. Four wheelers continue to be a challenge on entry level and the premiumization SUVs, which have been doing well. That trend is sustaining. Not much of a change that we are noticing there. Commercial vehicles, we are wary. And we think there is some bit of oversupply which has kind of picked up. Tractors still not reflecting. So this broader level rural recovery, I still don't want to I mean, I've not been a fan of calling for rural slowdown or now rural recovery both over the last few years. Tractor sales were doing well. E-commerce company sales in rural was doing well. Cell phone sales in rural continue to do well, even though two-wheeler sales weren't in the preceding, say, 24, 36 months. Now, tractor sales isn't doing well, two-wheelers doing well. So my sense is it's all more the wallet beginning to trend differently than wallets shrinking. Behavioral patterns are more relevant, spending patterns, and they are not reflective of at a broad level rural recovery or slowdown. I think we'll keep talking about it at a market level, but I don't think that's really indicative of how consumer is reacting. At the end of the day, there are cell phone sales in rural, I mean, phenomenally good. So I'm not really going by just this narrative on rural slowing down and picking up. But for sure, we are seeing various pockets of auto sales continuing to do well, and that's something that we've been expecting, and we are now seeing that play out.
Okay. Well, we're out of time completely on this leg of Talking Point, unfortunately, today. Ganeshram, thanks for taking the time out and being with us. But look forward to a slightly longer conversation the next time that we speak. But much appreciate your time today.
Thanks for having me.
Now, the pleasure was entirely ours. And just before we wrap up Talking Point, look at those flashes on your screen. Air India Express has given an ultimatum to all employees who are on mass leave to join duty, or else the management may take action. Remember, this morning we got the news that 25 employees were asked, senior cabin crew were asked to leave, and that won't be the end of the number. So there's a serious fight out there. Let's see which way it takes shape. But wrap up on this leg. Thanks so much for tuning in. Up next is the FNO Show.